right, work together 11-3. What we're going to be doing is posting to the general ledger. So general ledger is what we were used to posting to before, where there was a debit credit column and then a balance debit and credit column. So not new, we just have to make sure we know how to do it from our special columns or special journals. So instruction number 1 tells us to start a new page for our general ledger account supplies office. Account number 1145, the balance as of October 1st of the current year is $3,824. So I'm going to scroll down, and I'm going to find my account for supplies office. Oh, there it is. Already has my account number, account title, and account number. All I have to do is put the balance in. Well, it's the same business that we've been using all of our work togethers on. So balance, post reference, I don't put anything in debit and credit. I go directly to the balance column. What type of account is supplies office? Asset, normal balance? Debit. I should give you guys a T account quiz again. So I just put it in the balance column. I don't put it in the other individual debit and credit columns. Got it? Okay. Now, instruction dos. That's 2 for you, if you didn't take Spanish. Okay. Post the October 19th general debit entry of the cash payments journal to the appropriate general ledger. So, cash payments. So when I look at cash payments, right here I'm looking at the 19th. My account right here is supplies office. See that? Now, boys, there is a little bit of mistake because we should have a spot to put our account number there, and they didn't give it to us, so that's a whoops on Applia. But I'm really posting right now my general columns go to my general ledger. How do you know if it's a general ledger versus a subsidiary? A general ledger account always has a both debit and credit balance column, okay? So general columns go to general ledger. Good use of terms, right? So supplies office, I'm going to put the date of the 19th. What's my post reference? So how'd you get that, Stevie? Cash payments journal, page 15. So that is going to go in here, CP 15. And I'm going to debit $69.60. Supplies office had a previous balance of $3,824. I now need to add $69.60. So new balance, $3,893.60. Caleb, you agree?
Yep.
Oh, Dorn agrees too. Now, normally I would take 1145 and put it back up here, but Applia has a mistake. They already had it put in there. Okay. Now, I need to go to my general journal, and in my general journal, I'm posting all the way down. Every single one of these needs to be posted. So on my general journal, I'm looking at line 1. The date is the 12th. My account is sales returns and allowances. So I'm going to go ahead and go to sales returns and allowances. This is the first time we've posted to this type of an account. Sales returns and allowances is a contra account to sales. It has a debit normal balance. The date is going to be the 12th. Post reference is going to be G11. And I'm going to debit sales returns and allowances $52. Previously throughout this year, we had customers return $903 worth of product. Another customer just returned $52. So total throughout this fiscal year, I have $955 worth of product returned. Imagine if that number was $20,000. What would that tell you? That your customers don't like what they're buying and you're wasting a lot of time. So you should take a look at that if you have a really large sales returns and allowance number. My last number I do is I take 4130, put it back up on my general journal. After sales returns and allowances, I go to sales tax payable. The date is still the 12th. Sales tax payable, and then I'm going to do G11. And then I'm going to debit sales tax payable, $3.12. Sales tax payable is a liability. Liabilities have a credit normal balance. it has a balance of $1,410. Now, the customer returned products, so we no longer owe $3.12 in sales tax. So I need to subtract $3.12. It has a debit balance, though, of $1,406.88. Make sure it has a, excuse me, I said debit. I meant to say credit. Should have a credit balance of $1,406.88. Take that account number, 2140, goes back up here. Are you not agreeing with my math, Mason? Did you subtract 312? Okay. Now, line 3, what account am I posting to? Accounts receivable. Now, this is where it's different. Please pause and listen. Okay? We learned how to post to our subsidiary ledger. We went and found the account for David Bishop. Okay? We did that with Section 1 and Section 2. We posted to our subsidiary ledger. Now, when we post today, we are really posting to our general ledger, and in our general ledger, we have that a controlling account called accounts receivable. When I look at the balance in accounts receivable, that is the total of all of my customers, what they owe me. That's important. I need to know the total amount. But I also need to know what each individual one is. So we need to go through and post both to the subsidiary ledger and to the general ledger, so I have my total number and I have the individual. So that is why in the post reference column here on line number 3, there's 2 spots for account numbers, because you'll post both to accounts receivable and to my subsidiary ledger. Now, accounts receivable is going down here because the customer returned items. So you just got to make sure that when you go to accounts receivable that you go ahead and credit that account number. That's it. Thank you. So again, accounts receivable at a $1,339.85 balance. Subtract your $55.12, and you get a new balance of $1,284.73. Account number 1130 goes back up top. Next one I'm going to post is going to be supplies office. Post reference G11. It's going to be debited $2,544. Take the previous balance of $3,893.60 and add your $2,544. Last thing I do is put account number 1145 back up on top. Now, on line 5, I'm doing very similar to what I did on line 3, but I'm posting to the accounts payable instead of accounts receivable. We owe electrographic supply $2,544. Previously had a balance of $2,517.80. Add those two together. Gives me a new credit balance of $5,061.80, and account number 2110 goes back up top. On line 6, we have a vendor that we returned items to, so we're going to go ahead and debit accounts payable $125. Because we return products, so we have to update and then decrease our accounts payable by $125. Account 2110 goes back up on top. Purchases, returns, and allowance is a transfer account to the account purchases. Purchases has a debit normal balance. So therefore, purchases, returns, and allowance should have a credit balance because we use it to keep track of all of the products that we return. And as of October 1st of the current year, we returned $1,901.35 worth of merchandise that we bought. Again, as a business, you need to take a look at what you're returning. If you are returning a lot of money, you are wasting a lot of people's time. Because somebody has to go through and order it, somebody has to receive it, you have to check it in, go through and look at it and decide you don't want it and then return it. That's a lot of wasted time, and employees will get frustrated if all they're doing is returning merchandise. So you want to make sure that you have procedures in check to make sure that it is working efficiently. So I went through and posted everything from my general ledger, except I did a math mistake problem. What did I do? 202635. Any questions on posting to from your journals to the general ledger? Pretty straightforward, right? Nothing too earth-shattering yet? No. That's why I don't think this chapter is as difficult. We need to see how we implement it using our special journals. The biggest thing is making sure you understand the difference between your general journal and your subsidiary ledger. I will turn on your application problem.